Hey guys, happy Sunday and welcome to Smart Trade Stock Talk on August 26th. So as you guys know, I was not here on Thursday and I do apologize for that. However, we are cranking out the course and the course is tentatively scheduled to be released this week. So be on the lookout for that. I'll give you guys more details as we get near the release date, but a lot of exciting things are happening right now, so I just wanted to let you guys know first off, because you guys are on the YouTube channel. So thank you so much for all of your support and making this really possible. Let's take a look at the SPY, or the S&P 500, on the yearly chart. And recall on Wednesday video, what did we say? We said that the market was obviously bullish, and you guys can see when we left off on Wednesday, this was Friday, Thursday, and here was Wednesday. It was just basically consolidating sideways. And what did we say that was? That was very bullish behavior for the markets, right? And you know, I still hear a lot of speculation about markets coming down and we're near the resistance. I heard a lot of it when we're near the resistance here, and it just doesn't make much sense. As you guys know, when we're consolidating sideways at a resistance area, that's a more bullish signal. At the very least, we're giving time to catch up with price, and now we are heading higher. As a matter of fact, look at the close on Friday. We closed over the resistance level, made an all-time high, and what does that mean? That looks like a very definitive breakout trajectory, which we've been talking about the entire time. We talked about the reversal signal here, and then we talked about the potential upside from there. So hopefully you guys were able to take advantage of this opportunity. So what's going on now? What do I see in the near future for the markets? Well, the markets are obviously bullish. We can certainly come down and do a back test of 287. That's perfectly normal, right? If we do that, say, on Monday. But overall, look for this trend to continue until we see a trend reversal. We don't see any trend reversal right now, and therefore that's just something we have to keep in mind. So I'm actually kind of glad that, in some cases we didn't have a stock talk on Thursday. Here was Thursday. It looked like we could possibly come down at that point, but it doesn't really matter at that point, because remember, in a bullish market we can come down to the 20 period moving average or the support line at 284 and still be bullish. That just means that our prime opportunities to buy is surfacing again, and that we can certainly take advantage of if that occurs. If that doesn't occur, that's perfectly normal, right? All right, so let's take a look at TVIX, or volatility. Now, volatility is something that is doing something a little more interesting. I think a lot of you guys were pointing this out on Wednesday's video, and it was, how come volatility, and we're looking at the 180-day chart, is not going any lower? Note that the Dow went up significantly. We saw the S&P 500 make all-time highs, but volatility is staying put. Now, that is something interesting that we do have to keep in the back of our minds, because it looks like the volatility is staying put, and as we're crossing the resistance, we just have to be a little cautious. And this is just pointing to a small warning signal. Overall, the markets are just bullish, but that's just something to keep in the back of your mind. Why is volatility, staying put? All right, let's take a look at a couple of your trends, and the first one we'll tackle is 4/CL. And guys, before we get to crude oil, please hit the like button on this video if you do like these videos. I'll talk more about the course in a moment. There's actually quite a bit of things I want to talk about today, and in terms of the course, so I'll give you guys more of a sneak preview in a moment. So all right, so let's continue with 4/CL, or crude oil futures. And here's crude oil. I'm going to take you guys to the yearly chart first, and I want to show you guys, what did we say about crude oil after making this crude oil long run. Well, after this was on Wednesday's close, right? We said that crude oil is out of the bearish trend. And why did we say that? Well, one, we said that we closed over the resistance line of 66.65. We even closed over 67.77. So was it unusual for crude oil to test the 20 period moving average the next day and then have it go up on Friday? That is perfectly normal. As a matter of fact, one could argue that this retest, you could have bought into crude oil. Of course, this is not a recommendation to buy into crude oil, but crude oil obviously right now is looking more bullish. So, you know, this confirmation down here, we bounced right off, could have taken advantage of that. At the very least, crude oil went up over 1% on Friday. So taking a look at the tickers, the ticker would be UWT. Now, UWT, here you guys go. Gapping higher. Can you guys see we're gapping higher, and we are selling off a little bit, so that's something, again, pretty interesting to note. We are at a near-term resistance area, right? 36.93. You guys can see that we opened pretty much at 36.93 and closed lower, so that is the near-term resistance area, something to be cautious on. I think as crude oil pushes higher, and if it does, you know, you could take advantage of that. But right now, we do want to see like which direction crude oil will head, because crude oil, while it looks like it's heading higher, we could possibly come down and reaffirm the 20-period moving average. Once again, that's perfectly normal market behavior if it occurs. All right, let's take a look at /GC or gold futures. Wow, oh wow, oh wow. Take a look at gold futures, guys. I'm not sure if you guys were paying attention to gold futures, but if you guys take a look at this signal, right, we hit the 20-period moving, we were coming down. We were coming down. So the ticker you would have been looking at would have been JDST or inverse gold. However, look at this massive reversal, like a reversal of the reversal almost. And this pattern is a very good confirmation that gold could be on an uptrend. Now, if gold is on an uptrend and has found that reversal, as we have seen right now, we can see significantly higher prices for gold in the next week or weeks. So right now, it looks like a very strong recovery by gold, and there's no sign of reversal now, because if you guys remember the natural gas futures in the past, where we had this candle negating a previous reversal candle, what happened to natural gas? Do you guys remember that? I'm not sure if you do. You might have. It kept going higher, and that could be the probable trajectory for gold as well. Keep an eye on this one. This is looking better and better for gold, and to be honest, it's better for the economy that the dollar doesn't continue rising. So in the long run. All right, let's take a look at JNUG, which is the one that you want to be looking at if you're in gold. So here's JNUG or JNUG, and you guys can see how volatile this you know, ETF moves, right? You guys can see how we gap lower because of the down move, and then we made up all of the losses in the next move. You know, that's just something to consider when you're investing in ETFs, and something that we will discuss further in the course, and you know, how to go about investing in these ETFs. Okay, so next up is, of course, natural gas. So here's natural gas, and what do you guys see? So we talked about the optimal time, and you guys can refer to this video. So this was on Tuesday night's video or Wednesday video. We talked about this, right? The opportune time to get out of natural gas was where? At the resistance line. I don't change these lines, and you guys can see what happened on Friday. Natural gas continued to fall to where? To the 20-period moving average. So, you know, this is why, in my opinion, if you were in UGAZ, you didn't have to take the risk of a breakout trajectory. If it breaks out and reconfirms that support, sure, we have plenty of time to get in, but look, if you missed the time to get out, look where we are right now. I mean, you know, UGAZ, which follows natural gas, went down only 3%. So sure, you still have time to get out, but, you know, at the very least, you could have still taken advantage of that 5% move, you know, if you wanted to. So right now for UGAZ natural gas, we're looking still at a support at 63.71 to 64.16, but just be cautious again, because look what we're doing right now. Can you guys see this period of consolidation? Now this period of consolidation, right? The more we get rejected at the top, the more likely we're going to continue on lower and continue this pattern. This pattern is a very beautiful pattern for someone to invest in. However, you know, are we at the best time to short natural gas or buy into natural gas? That's a risk that you have to consider, because we're nearing the middle area, as you guys know. All right, so we're going to take a look at all of your tickers. But before that, let's talk a little bit about the course. So the course itself has over 10 hours of video and me explaining to you the different trends, the indicators, how to approach market psychology, how to put in these market limit orders, how to prevent yourself from losing a significant amount of money while capitalizing on your gains. That's one thing. Another thing is you guys will also have access to private stock talks. So private stock talks, what is that? So in days in which I don't do stock talk on weekdays, I will go and do a special stock talk with more extensive technical analysis. So utilizing the skills that you've learned within the course and just kind of feeding you guys more information. So we have that. In addition, we have a Discord chat group, and you guys get to spend 30 minutes every Sunday chatting with me about whatever tickers or stocks that you guys want to talk about. So we will be on every Sunday, or try to be every Sunday for 30 minutes doing that as well. And then, of course, there will be monthly tickers that I will be putting up onto the chat box as well. So that's another benefit of you joining the course. So hopefully you guys will find value, and hopefully it will improve your trading practice, because that's what I'm here for. So, all right, let's get to your ticker. So let's start with Michael. We have a pretty long paragraph, and hi, Kevin. Thank you for your stock ETF analysis. I always eagerly look forward to your stock talk Sunday through Thursday. I was wondering if you can break down Netflix. And then I think you were talking more about time intervals and which time interval I'm looking at. The one thing about time intervals is this is more extensively taught in the course as well. It's actually taught quite significantly in the course. And yeah, I agree. You're looking at different time intervals, and right now I like to look at the yearly chart. Because yearly candles show me a good, solid picture. But if you're looking at other charts, you just have to find what is significant to you in terms of those specific trends, and then you could utilize those charts. So here's Netflix, and Netflix had a really powerful move. And Netflix is a very strong stock, as you guys know, and this one was bound to recover. And we were going to a low, and we were bound to recover. And at what point? That was just the question. It wasn't going to be, Netflix is going to continue on dropping. It was a question of when is Netflix going to recover. We've seen that recovery now. And now you guys can see that we went over the near-term resistance and closed over the near-term resistance of 357. Looking at intraday, showing you guys, can you guys see? We hit it, and then just went steadily over. What does that mean for Netflix? What do you think it means? Netflix is on an uptrend, right? So the question is, will it come down and do another bottom? It could, but it is unlikely. Okay, it is unlikely that we will come back and test the 312, 313 area. Could it come back and retest the 340 area? Possible. That is more possible. And right now we're on an uptrend. Could it just continue on higher? Sure it can, guys. This is Netflix. Sure it can come up, consolidate sideways, up, sideways, up, sideways. That's perfectly normal, right? This is Netflix. So, right now we might be a little overextended, but once again, if you dipped your toes into Netflix as we were moving on this uptrend, you would have been good. So, yeah, good call out. I like this stock quite a bit. Rizwan, looking to short Kroger, inverted hammer, your opinion. I see. Okay. Yeah, so you're shorting Kroger. So the one thing you want to be cautious about is, once again, we have earnings coming up in early September. That is in around 2 weeks. So you want to keep that in mind, because the stock could be shifting rather quickly. You guys can see that we broke over the previous resistance, and all of a sudden we got a massive rejection signal, and now it's coming back down. But, whether that's meaningful or not, we'll see, right? This is hard to determine given that earnings is coming up. Remember, if we have earnings and it's severely overextended, it could certainly start falling, right? That's just something you want to be cautious about. So if you're shorting it, that is one that you could have taken advantage of. I think if you're shorting it, I think you might have been good. But again, you need to know where to set your stop loss if you're shorting Kroger. Thank you, Rizwan, for the ticker. Eric, I'm trying to be very patient with Shopify. Does it just have too many resistances? Also, let me know if I'm calling out this. No, you're good. You're not calling out this ticker too much. I'm glad to help you with analyzing tickers. Even if you call it out every day, that's perfectly fine with me. But all right, what time frame would be appropriate? So with Shopify, Shopify. Okay, so we talked about how Shopify has a support area at 116.35, right? And I said that would be the optimal buy area if Shopify does come down to that area. Of course, as you're in Shopify, you might not be as keen as holding it all the way down here, but you have to recognize at the same time, look at this 200 period moving average acting as support in these cases, and now we're back over here. So right now we're at an area of really like a question mark. Are we going to start hopping over these resistance levels? And I like what you said in terms of there are quite a bit of resistance levels going on in this chart, one of which is the 143 area. That's certainly a resistance level, a 150 area, that's a resistance level, and there are certainly more resistance levels as we get higher. So, I think if you're holding it long term, you may be okay, but short term, you might not be profitable. And therefore, while we are at the 200 period moving average, just be a little cautious on this one as well. Okay. Twitter, Addy Boy. Yes, Baba was not a good one to enter. Very good call out on that one. Thank you for your comment. And let's take a look at Twitter. So we've talked about Twitter, right, in the past, because I took you guys to the 20-year chart. These are monthly candles, and what do we see, guys? Can you guys see this long red candle over here? That is a pretty definitive sign that we are going to go lower. The last time when we visited Twitter, you guys asked me if we should go in, and I said it won't be unusual for the stock to go up a little before it comes on down. And I talked about various areas of levels in which it could drop to, such as $28.50, perhaps even lower at $24, perhaps even less than $20. And this is not a good pattern to invest in. You guys can imagine looking at the yearly chart, what are we forming? This is once again looking like a bear flag pattern, right? Here's the leg down, here we have a leg up, and possibly for that next leg down. The general trajectory is down, and therefore not something I would actively go long on at the very least. If it goes up, that's fantastic. We'll revisit. There's if it goes up and do another reversal of the reversal, but that's not we can't really speculate that that's going to happen until it actually happens, because that's a very hard barrier to cross, as you guys can imagine. All right, Gerp, I see you're a genuine good person and really talented. Thank you. Appreciate your work. And can you give me the optimal entry points? So I'm not sure if you're talking about this one. If you are, I'll take a look at APH. In the meantime, yeah, put the tickers in as you would find it on the Thinkorswim platform, because this is what we're using. Okay, so looking at this, you guys can see what? We're nearing a short-term resistance area. Can you guys see this resistance area? Okay, the resistance is $95. And right now we have selling pressure to the bottom. So what is the likely trajectory? The likely trajectory is downward toward the where? Toward the 50 period moving average, or the blue line. So you guys can see that this could act as a support over here, down at $91, but this one is trying to move downwards, and therefore as we're nearing the resistance, the potential is lesser and lesser. Don't have to take that risk, in my opinion. Thank you for your call out though, Ben. All right, I follow your analysis on a regular basis. Thank you. I know you do most of the stocks, but let's say for crude oil, what would be a good entry? Oh, we talked about crude oil, right? We talked about 4/CL, and the good entry point would be where? The confirmation of the 20 period moving average, right? We talked about that in this day, because at the very least, where you're wrong. You know where you're wrong. You know where to get out upon a daily close, and therefore that's your confirmation right here, and that's your entry. So there you go. EJ, let's take a look at YELP. Okay, so Ah, yes, I remember Yelp. So Yelp had this massive, earnings report, and look at this catalyst back up. But all of a sudden, we reversed back down, back to the 20-period moving average, and now we're going higher. So Yelp, Yelp is actually looking quite nice right now. And I'm going to take away some of these trend lines right now. I want to show you guys. Oh, that's interesting. Lower low. So Yelp is looking pretty good in the near term. Just note that if you were to invest right now, and this is something, I think there is still potential for Yelp to go higher right now, but just note that if you're investing in Yelp, these are the number of candles higher than the current position. So your chance of taking a profit is slim, and your risk is great. Sure, we could break out, but once we break out, again, I want to see that confirmation of a support area. Right now, I don't see many confirmations of a support area, as a matter of fact. And therefore, the potential for this one to come down and regain most of these majority of the candles is going to be higher. And at what point? Well, it could go up here and then reverse and come back down. That's just how it is, and that's just how it works. So I think there are better entry areas into going to Yelp, but I like how you're eyeing the trend. Good job, EJ. Chris, Apple, sorry for getting you confused. Okay. No, you're good. So here's Apple, and Apple, nothing wrong with this chart, right? You guys can see Apple's leveraging the markets. The markets are going higher. Apple's staying put. What does staying put mean? You guys know it. We talked about, consolidating horizontally perhaps means another leg higher. Nothing wrong with this chart. Apple could even fall down to 211. Whether that's possible or not, that's a decision making up to you. But this is, looking like, that move to the upside once again. So it looks pretty good. K9 YY. So YY, and this is the problem with for YY. Thank you for your submission. And we're looking at the yearly chart, and for YY we have a lower high, lower low, right? And if I just did this trend line down here, you guys can see how much it can drop. As a matter of fact, we can drop even lower significantly. So this is a quite good shorting opportunity if you wanted to. Of course, this might not be the best shorting time right now, but if you were shorting right at the reversal signal up here, right, or perhaps if you were shorting at the reversal signal up here, this one moves really quickly to the downside. So if you're looking to short, you possibly have a good chance. If you're going to go long, I would have to advise against going long on this one, as this is a very steep declining pattern. All right. Farzad, can I take a look at CGC? I've been holding this position for a while. Oh, congratulations. Looking for possible sell targets. So let's take a look at the long-term trend. Yeah, so CGC canopy growth. Oh, okay. I see what it's doing. Yeah, so right now, it's really difficult, as you know, because we don't have any technicals telling us where our resistance areas are. And therefore, we have to find that sign of a trend change. Do we have that sign of a trend change right now? The answer is no, we don't have a sign. And, that means what? We are overextended. We could consolidate to the moving averages. However, it could still continue higher. And, it looks likely that it could push higher right now. So if you were in this one, congratulations. I think a lot of you guys were talking about this one and also CRON as well. And my goodness, there it is, right? There's the boost. So yeah, this one looks likely to push even higher. This is something really interesting that is occurring within the cannabis kind of sector that's been growing because of the more regulations and the that are coming out as well. But this is looking pretty solid with this trajectory. Overall, nothing wrong with this trajectory. So congratulations if you're in it. All right. So guys, thank you very much for watching this video. be on the lookout for more about the course in the coming days. Working hard to push that out for you guys. So, all right, I will see you guys tomorrow, Monday, for another Stock Talk. In the meantime, enjoy your weekend, enjoy your trading day tomorrow, and I'll see you later.